All right, let's talk about Aurobindo Pharma. They've just dropped some big news, a share buyback, and at a premium price. So what's the deal here? Is this something you should be looking at? We're going to break it all down.
Okay, let's get straight to the point, the numbers. Right now, the stock's trading at around 13.34, but here's the kicker. The company is offering to buy it back for 14.75. See that difference? That's what this is all about.
Yeah, do the math, and that works out to roughly an 11% premium. Now that is the kind of number that really gets an investor's attention. So here's the game plan. We'll start with the offer itself. Then we'll get into the nitty-gritty of how you can participate, including a pretty cool strategy for small investors. After that, we'll take a step back to look at the company, and finally, we'll weigh the pros and cons, the risks and the rewards.
All right, let's kick things off with Section 1, the premium buyback offer. Let's really dig into the core numbers.
So what are the details? Well, the price is locked in at $14.75 a share. The company's putting up a massive 800 crores for this whole thing, so you know they mean business. And the method? It's called a tender offer. It sounds fancy, but all it really means is they're officially inviting shareholders like you to sell your shares back to them at that nice, fixed price. Okay, so that's the what. Now for the how. How does an investor actually get in on this? Let's go over the key dates and the steps you absolutely need to know. It's pretty straightforward, really, just 3 main steps. 1, you got to buy the shares before the cutoff. 2, you need to make sure you're holding those shares on the record date. That's the day they check who's eligible. And 3, if you've done those 2 things, you get the chance to offer your shares back to the company. And timing is everything here. The announcement came on April 6th. The most important date for you? April 16th. That's the last day to buy shares to be eligible. Why? Because you need to be on the books for the record date, which is the very next day, April 17th. So seriously, that April 16th date is the one to remember. All right, so now you know the mechanics. Let's move on to the interesting part, strategy. Specifically, there's this popular little tactic that retail investors often talk about. It's called the one-share approach. And this brings up a really good question, one you might even be thinking yourself. Is it possible to buy just one single share and have the company buy it back from you at that full premium price? So here's the thinking behind it. Check this out. The company wants to buy back over 5.4 million shares, but there are only around 237,000 public shareholders. So even if every single one of those shareholders offered up just one share, the company would still need more. The map here kind of suggests that they'll almost have to accept at least one share from everyone who participates. It makes the odds for small investors look pretty darn good. But, and I really have to stress this, nothing is a sure thing. It all comes down to something called the acceptance ratio. That's just the final percentage of shares the company decides to buy back from everyone who offered. If a ton of people tender their shares, way more than the company wants, they won't accept everything. And here's the catch. We won't know that final ratio until the whole thing is over. It's the biggest wild card in this entire play. Okay, so the buyback strategy is one thing, but what about the company itself? Is Aurobindo Pharma a good investment beyond this specific event? Let's zoom out for a minute and take a quick peek at its fundamentals and what the charts are saying. First up, let's talk valuation. A quick way to do this is with the PE ratio, which basically tells you how expensive a stock is. For Aurobindo, it's sitting at about 21.9. The average for its industry, 27.1. So what does that mean? Well, it suggests that, compared to its competitors, Aurobindo's stock might actually be on the cheaper side.
Now, who actually owns the company? Well, the insiders, the promoters, they hold just over half the company. Big money, institutional investors from both inside and outside the country own most of the rest. That leaves just a small slice, about 6.5%, for the public. That's something to keep in mind because a smaller public float can sometimes mean more price volatility.
And what about the technicals? If you look at the stock chart, it's been in a pretty nice uptrend. Right now, it's bumping its head against a ceiling, what analysts call a resistance level, right around 1360. It's struggled to break through that price before. But if it can finally push past it with some real strength, that could be a very bullish sign for what's next. Okay, we've talked about the good stuff, but you can't make a smart decision without looking at the other side of the coin. So let's talk about the key risks and opportunities, especially the stuff happening outside the company. Every investment has its risks, and this one is no different. There are a couple of big external threats to be aware of. First, there's the political uncertainty. the talk of potential 100% tariffs from the US. And second, just the general market mood. Any major geopolitical flare-ups could easily spook investors and pull everything down. But hang on a second. Here's a thought. What if those risks actually push the price down for a bit? Could a little bad news actually be good news for someone trying to get into this buyback? It's an interesting idea, right? The thinking is, if some of that scary external news hits and the stock takes a temporary dive, that could be your chance. You could potentially scoop up shares at a lower price and then still turn around and offer them to the company at that fixed $14.75 price. It's basically using market fear to your advantage. So let's put it all together. In the pro column, you've got that sweet 11% premium, the fact that the stock looks cheaper than its peers, and a bullish chart. In the con column, the biggest question mark is that unknown acceptance ratio. And, of course, you've got those big picture political and geopolitical risks hanging over everything. So where does that leave us? Is this Aurobindo buyback a smart, calculated play on a guaranteed premium? Or is it more of a gamble, with all the uncertainty around how many shares will be accepted and what might happen in the world? Ultimately, that's the question